This is Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. President Trump hit South Korea with 15% tariffs while touting hundreds of billions of dollars in investments into the US. India, meanwhile, to face a 25% rate, possibly going higher over its Russian energy purchases. Also ahead, the Fed noting inflation risks as it holds rates with two dissenting votes. Jay Powell unnerving bond traders by steering clear of signalling a September rate cut. And a big tech bonanza. Meta soaring in late trade on a sales beat and a strong forecast. Microsoft reporting better than expected cloud growth and record spending on AI infrastructure.
To our top news, President Trump saying that he's reached a trade deal with South Korea that would impose a 15% tariff on its exports and see Korea invest $350 billion in the U.S. This came just hours after he announced a 25% tariff rate for Indian goods effective Friday. Bloomberg's Seoul Bureau editor Danny Thomas joins us now, along with our digital politics editor Romy Varghese. Danny, let me start with you because President Lee is also speaking in South Korea on a Facebook post saying that this will actually help strengthen the alliance. What do we know so far about the deal?
Hi, Shery. So this has been a pretty big development. As you know, Seoul has been lagging behind in all these trade talks because of the political chaos we had here. And as we were hitting up to this August 1st deadline, it was pretty uncertain whether we will reach a deal or not. So what we got was kind of along the lines of what Japan has got, 15%, which is kind of a good number or a number that a lot of countries have landed. So South Korea should be happy about it. I think the big question mark, which is still not clear, is whether automobiles will have the similar rates, because that's a big chunk of the exports into US. There is no mention of that, but I think that was a big lobby that South Korea was trying to make sure that automobiles get the same treatment as rest of the other industries. So that's one thing we need to find out. Other details are still kind of pretty sketchy in terms of what does the farm market opening up looks like, because that's been it's a politically sensitive issue here. So we need to know the details of how much of opening of those beef and rice markets will happen. And the third point, which kind of, again, is not touched and where South Korea was pretty sensitive, was the whole Forex situation. And we had to see, and I think in hours and days ahead, we'll get a sense of how much pressure South Korea had to take in to get to this stage. But overall, I would say it's a kind of a good outcome for South Korea, considering we only started in negotiations after President Lee came on board in early June.
Presumably they faced some less pressure than India has, right? What are we hearing there in terms of the tariff levels and how it's really correlated to that oil relationship with Russia?
Yes, this is incredibly disappointing for India, especially given what we just saw, what Denny just outlined with the South Korea deal. I should note that Modi, the Prime Minister of India, was one of the first foreign leaders to visit Trump in the White House in February. So this is incredibly disappointing. And J.D. Vance, of course, the U.S. Vice President, had visited India and Modi in April. So India was hoping to get a competitive rate. But at this point, at 25%, that's not including the penalties, additional penalties for engaging in energy purchases with Russia. This is going to put India at a competitive disadvantage. You see South Korea with 15% and Japan with 15%. I think this really puts India at a disadvantage with its most important trading partner.
Yeah, especially when we're getting the latest lines coming from South Korea and the presidential secretary Kim Yong-bom now talking about how the auto sector tariffs will be 15%. We're also hearing that there's no additional opening when it comes to U.S. beef and rice imports. Remember, the U.S. was seeking concessions from South Korea, including lifting that ban on U.S. beef from cattle over 30 months old and expanding quotas for buying U.S. rice. Danny, let me turn back to you because these were very sensitive topics that had been discussed between the two sides. So how are we expecting this to actually be messaged by President Lee and his administration, which of course has just taken office?
I think that's a big coup, especially the whole beef and rice, conceding there. I think that's a big political win. Lee Jae-min has started his tenure on a very strong note, and as you know, KOSPI, which is the benchmark index, is up about 36%, making it one of the biggest gainers in the world. I think this is going to further add to his appeal and his aura, and it's a great outcome, especially on the ag side, which was getting a lot of pressure from the farm sector. We had a good story about how beef farmers were up protesting again. So I think this ag sector not conceding is a great outcome, but I think we need to see what else South Korea has conceded, right? I mean, I think it's a bargain on both sides. So if you haven't conceded on ag, we need to wait and see where else South Korea might have given a bit more of the to get across the line here.
Romy, it was also chaos when it comes to copper trading right on that exclusion from Trump's tariffs.
That was the biggest news from the copper tariffs today, was what was not included. And the administration excluded the most widely imported form of copper, that's refined copper. Investors had been stockpiling. We have massive stockpiles of refined copper here in the U.S. And as a result, you saw the copper market fall today. And it really underscores the underlying uncertainty of Trump tariff policies. Investors might think they know what's going to happen, but ultimately there might be an exclusion or there might be a delay. Just look at what happened in Brazil.
Yeah, we're getting also the latest lines from South Korea that the security issue will be discussed during a President Trump and President Lee summit. Of course, we continue to see conversations between the two sides when it comes to the ongoing strengthening of the alliance. But Romy, let me just continue with you, because we also had President Trump exempting or applying, I should say, tariffs to low-value imports. So suspension of the de minimis exemption. So how important will this be?
This had been telegraphed before, and actually eliminating this tax break happened for goods from China and Hong Kong. But this is now widespread. This was a tax break that was enjoyed by these online retailers like Shein, for instance. But significantly, Americans themselves who travel abroad and try to come back into the United States with all the goods that they bought from abroad will now have to pay taxes on these items that they had bought, like wine from Italy or jewelry from Switzerland. So now Americans bringing home more than $200 will have to pay these taxes. So this is quite the broadening of this tariff that had been telegraphed before.
Right, Bloomberg Digital Politics editor Romy Varghese and Seoul Bureau editor Danny Thomas there, of course, with the latest when it comes to that U.S., South Korea and India deal as well. But on South Korea, we have the latest lines coming from the government saying that the security issue between the two sides will be discussed during a President Trump and President Lee summit. We're also hearing from the U.S. Trade Representative Greer speaking on Fox News, saying that South Korea is always very challenging on trade with the United States, but that they actually obtained significant concessions from South Korea. Of course, we have heard from President Lee on a Facebook post saying that this trade deal will help strengthen the alliance, and that $150 billion of a $350 billion fund in order to invest in the United States will be actually dedicated to shipbuilding, an area that, of course, South Korea is very strongly represented on. And we're hearing the latest from the USTR saying that the U.S. has obtained significant concessions from South Korea. Haidi.
Shery, of course, we're also watching the Fed and that reaction because the U.S. Central Bank voting 9-2 to hold interest rates steady. Governors Christopher Waller and Michelle Bowman insisting instead of backing a 25 basis point cut. Despite that, though, Chair Jay Powell says it was a good meeting.
On the dissents, you know, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting, all around the table, where people were thought carefully about this and put their positions out there. We had two dissenters who I think you want that clear thinking and expression of your thinking, and we certainly had that today.
Christopher Condon leads Bloomberg's Fed coverage and joins us now from Washington. So, Chris, tell us about sort of the nuance of the messaging from the Fed chair, who obviously stood his ground in terms of advocating for patience, but of course the dissent as well as the choice not to flag what's going to come in September was really what roiled markets.
That's right, Heidi. You're absolutely right. I think Jay Powell came into this press conference seeing the market leaning very clearly in the expectation for a cut in September. The statement hinted a little dovishly by acknowledging the weakness in the first 2 quarters in the U.S. economy. He cut right back the other way. I think his number one goal at this press conference was to preserve the options for himself and the rest of that committee when they finally get to September. Don't forget, there's a lot of data coming before then. You're going to get 2 jobs reports. You're going to get 2 CPI reports. Powell just did not want to have a situation at this point where the market was leaning one way or the other too heavily. So his goal was to bring the market to the center, and he succeeded. If you look at the Fed funds futures, the probability that those prices assigned to a September rate cut really dove today from about 65% before the meeting all the way down to the mid-40s. So he really did, I believe, get what he wanted in trying to keep the market guessing.
And you also mentioned, of course, the economic data coming out. We already had economic data today showing resilience in the U.S. economy. What are we seeing in terms of what will be important for the Fed chair in order to make that move?
Right. Well, the GDP data, to begin with, on the surface, it looked pretty good. Taken the first quarter and the second quarter all together, it basically shows a slowly deteriorating economic situation, very slowly. They'll be looking at the Fed next, also, of course, at the inflation data to see what kind of pass-through there is from tariffs. But I also believe that increasingly the focus is going to be on the labor market. This is where it's clear now that the tariff pass-through is going to be slow, take a long time. But the labor market, if it begins to deteriorate, that could happen very quickly. So the Fed is going to be extremely attentive to that. Now, Powell, on the labor market today, was not expressing much concern, I have to say. He acknowledged there's slowing, but he said for all of the lower demand that we're seeing in the U.S. labor market, there's sort of an accompanying lower level of supply because of the restrictions on immigration. So that's, in his words, keeping the labor market in balance. And he called it solid many times. So quite an interesting and optimistic read there. But they'll be looking at I think, increasingly at the labor market data.
It does seem like more of a disagreement or issue over timing, right, rather than fundamental disagreement over the drivers or the catalyst for a move. So in terms of the data points, what do you think is going to be the one that takes them to crunch time and the one that we should be watching out for?
Oh, I think it'll be the unemployment rate. Again, the labor market is what would move more quickly. The committee will not be able to ignore a meaningful rise in the unemployment rate. At the moment, of course, it's not a very good labor market if you're looking for a job, but there's very few layoffs. So Powell is correct to say that there's not a lot of quick deterioration happening there on surface, but there is growing weakness. And if the unemployment rate goes up by 3 or 4 or 5 tenths of a percentage point, that will really force the committee's hand, and they'll have to start moving towards cuts at that point, for sure.
Bloomberg's Christopher Condon, who leads our Fed coverage there. And we are continuing to, of course, watch the implications when it comes to trade. Now, we have, of course, seen that deal being struck with South Korea. And at the moment, we're hearing the U.S. Trade Representative Greer, they're speaking in an interview on Fox News, saying that we obtained significant concessions from the Koreans. Korea has also said that the U.S. has agreed to cut auto tariffs to 15%. Representative Greer saying that the EU offered to make energy energy purchases to the US, and they'll be constantly monitoring compliance when it comes to these trade deals. So along with, of course, the deals that we've seen with Japan that sort of kicked it off over the past few days, as well as now Korea and also the EU, still waiting for sort of the degree of details, particularly when it comes to the investment compromises, the concessions and promises being made to the White House. But we are getting a little bit more commentary around that, Shery, with regard to this 15% tariff and some of the $350 billion in investments in the US that's part of this South Korea deal.
Right, Heidi, and coming up on the Asia trade, of course, all of these trade headlines will have an impact on the economy. We'll be talking to equipment manufacturer Komatsu CFO Takeshi Horikoshi on their business outlook and navigating this trade uncertainty. Plus, market insights from Nikko Asset Management and a preview of today's BOJ rate decision with JPMorgan Securities Japan. But first, we dive into today's big tech earnings with Meta and Microsoft beating estimates and giving their outlooks on the AI boom. Details next. This is Bloomberg.
Meta shares soaring in late trading after it topped projections for second quarter sales and gave a stronger than expected forecast for the current period. It is a sign that the advertising business is still growing quickly enough to support aggressive spending on AI. Our Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, joins us now from New York. So take us through sort of what really jumped out at you in terms of these numbers.
Yeah, look, it was a significant top-line beat, and both ad impressions growth of 11% and ad pricing grew 9%. So when you compare it to YouTube ads, which grew 13% in the quarter, I mean, the 22% top-line growth looks really solid, and the guide also was pretty solid as well. And that is what drove their CapEx guide for 2026. In fact, we are looking at probably $100 billion in CapEx from Meta next year. This year, it will be closer to $70 billion. So really, net-net, they are investing big in AI, and they had the print to justify that sort of CapEx increase for next year.
Sort of the same picture with Microsoft as well, right? Record AI spending, but is it justified for Microsoft as well?
Yeah, same thing for Microsoft Azure. I mean, they saw a sequential increase of 400 basis points, so Azure growth of 39%. And it seems to continue for the next quarter. And Microsoft called out that they are GPU constrained when it comes to the availability of compute in their data centers, and it's going to carry through first half 26. So Microsoft doesn't give you a full year guide for next year, but for next quarter they guided to $30 billion in CapEx, which is another almost 28% increase. So clearly that increase in CapEx is a trend that we are going to see from all the hyperscalers. And Meta, as we know, has made some big acqui-hires. So in the case of Meta, the OpEx also is going to grow significantly for next year.
Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, there on the megatech numbers. And we're also watching Qualcomm shares falling in late trading after it reported weaker than expected smartphone chip sales. Phone-related revenue rose just 7% to $6.33 billion last quarter, missing estimates. The results add to fears that a broader chip rebound may be short-lived. ARM shares fell in late trading after the chip designer forecast weaker than expected profit. The company says it's ramping up R&D to chase AI growth, with second quarter earnings projected at 29 to 37 cents a share, which was below some estimates. CEO Rene Haas says the spending surge is affecting profit in the short term. China's CATL says profit rose 34% in the second quarter to $2.3 billion as it shrugged off weak EV demand and falling battery prices. Revenue fell slightly short of the consensus estimate of $13 billion. US tariffs have added to the uncertainties facing Chinese suppliers. More to come here on the Asia Trade. This is Bloomberg.
And we have the latest breaking news coming out of Commerce Secretary Lutnick in the U.S. now saying that that agreement with South Korea on tariffs has been put at 15%. He's also saying that those blanket tariffs and also the auto tariffs will both be 15%. But he's saying that steel, aluminum, and copper are not included in this deal and that South Korea will not be treated any differently when it comes to other sectors like chips and drugs. South Korea has agreed to purchase $100 billion in LNG, according to Secretary Lutnick. We had already heard from President Lee Jae-myung earlier today on a post on Facebook saying that the South Korea-U.S. trade deal will help strengthen the alliance. We've heard from his administration that this will include a $350 billion fund to invest in the United States, likely to consist of loans, mostly guarantees. $150 billion among $350 billion will be dedicated to shipbuilding. $200 billion will be allocated to chips, nuclear power, and biological power and bio as well. South Korea and the U.S. trade deal will help companies' U.S. market entry, according to the Korean administration. And South Korea also saying that there's no additional opening for U.S. beef and rice imports. Remember, the U.S. was seeking concessions from South Korea, including lifting a ban on U.S. beef from cattle over 30 months old and expanding quotas for buying U.S. rice. This was a very sensitive topic for South Koreans, and it seems that Seoul will not see any additional openings in these two sectors, Haidi, but we have heard from the USTR Greer as well that the U.S. feels like they obtained significant concessions from South Korea.
It is all about making this progress on trade ahead of the deadline, right? And President Trump is also hinting at progress being made when it comes to these tariff talks with China. Speaking at the White House, he sounded optimistic about a deal after meetings held in Stockholm this week.
We're moving along with China. We're doing fine with China. I think it's going to work out very well. We're right in step. I think we're going to have a very fair deal with China. Thank you very much.
China's ruling Communist Party will hold its next major gathering in October with a focus on its development plans for the next 5 years. State media reports didn't give a specific date for the party plenum, but the gathering of some 400 committee members will review proposals for China's 15th five-year plan, which covers a period from 2026 through 2031. Take a look at what we're watching when it comes to markets. Of course, a lot to contend with, both in terms of tariff progress, but Jay Powell bucking the pressure and seeing two dissenting opinions when it comes to that resolve on holding rates and what happens with inflation going forward. But we're watching for the reaction when it comes to Korean markets coming online with that 15% tariff deal.
And we have breaking news as well right now on the Mexico-U.S. trade deal. We are hearing that President Trump will be speaking with Mexican President Sheinbaum on Thursday. Of course, we know that there have been discussions to avoid the threatened 30% tariffs on Mexican goods. And this is according to people familiar with the matter that say that President Trump and Sheinbaum will be discussing the Mexico plan to cut the trade deficit. Mexican officials are in Washington working with U.S. counterparts in order to avoid this 30% tariffs. And we have heard from the Mexican president that if necessary, she will be discussing the tariffs issue directly with President Trump this week. So we are expecting these conversations to happen on Thursday ahead of that August 1st deadline. But take a look at how markets are setting up, because, of course, we have seen already the reaction coming from that positive trade deals from South Korea. We are now seeing Nikkei futures to the upside of 0.3%. 1%, while U.S. futures are also rallying because of mega tech earnings today. Of course, we had Meta, Microsoft as well surging in extended trading after solid earnings. Nikkei futures gaining ground. This, of course, as we continue to hear more details about the South Korean trade deal as well. 15% tariffs. We'll be watching that market at the open. As Sydney futures are seeing downside of about 0.25%. All of this as we head towards a Bank of Japan policy decision as well. The economy is expecting for the BOJ to keep its benchmark rate steady while boosting the inflation outlook. For more, Bloomberg senior Japan economist Taro Kimura joins us now on a normal BOJ day. This would be the biggest news, but we have so much happening on the trade side. And of course, we have had the trade deal with Japan. How consequential will this be in order to set the BOJ up for the next few rate decisions?
Obviously, the agreed trade talks with the U.S. is the clarity the BOJ had sought for before they proceed with another rate hike. But somehow, interesting thing here is BOJ is still, in its latest signal, appears sticking to a cautious stance because they say they need to still see some hard data because the tariff rates are elevated than the previous years. So they need to be very cautious. That's interesting to me because the inflation is surging behind the curtain of the tariff talks. The corporates are aggressively passing on higher food costs and labor costs, and inflation expectations are surging. So therefore, the key point to watch from BOJ signaling today from outlook reports and press conference is whether or not the BOJ is tilted towards higher inflation side or still cautious on the trade impact on Japan's economy.
Are we going to see the upgrade of inflation expectations, and what do you think will be the next move? Is it October? Is it next year?
Right. For this meeting, they will upgrade the inflation outlook because oil prices are picking up from the bottom after the Iran-Israel conflict, as well as the recent inflation print is, I think, stronger than the BOJ had expected. So therefore, the inflation print will rise. And I don't think the UEDA will steer clear on the timing of its next rate hike, but I reckon it's going to be happening in October. September is plausible, but the BOJ has been hiking rates when they upgrade inflation outlook in their outlook report, and therefore moving in other timing will give an impression that the BOJ is guard is up against the inflation. So therefore, in order to keep on track of what they were signaling, I think the next move will be October. But that said, the timing, the risk is tilted towards the delayed side because the political uncertainty is still remaining, and politicians are calling for more fiscal expansion, and it's easy for the BOJ to be scapegoated when they hike rates and rise borrowing costs. So
I was going to say, because after the upper house elections, there are still a little bit of questions whether Prime Minister Ishiba can stay on, right? What does that say for the fiscal picture, as you mentioned, with all of these politicians calling for more spending?
Yeah, it's really uncertain, and I don't think it's very likely that the Ishiba will stay on for longer. But even if he stays, I think he needs to make a concession with the opposition party and expand fiscal stimulus compared with the status quo. And if the opposition takes the lead of the politics or other fiscal expansionary LDP leader takes the lead, I think the fiscal stance is going to be more expansionary. So we have more fiscal expansion, inflation is surging, and BOJ is dovish and assesses inflation transitory. It's a classic condition for the Japan's economy looking forward to face the stagflationary pressure.
Bloomberg's Taro Kimura here with the latest on what to expect from the BOJ, and of course all those stagflationary potential pressures could really move the markets, especially on the JGB side of things. Heidi, we are watching those yields now with multi-year highs as well.
And absolutely huge implications when it comes to the commodities complex there as well, right? We are watching the likes of oil, which is seeing some optimism on President Trump targeting those Russian crude flows pertaining to India, the highest in since about June, actually, with those threats to penalise India for buying Russian crude. But of course, the one that we're watching is really all of the oscillations when it comes to copper markets. US copper plunging, seeing the biggest intraday fall on record. Trump exempting the refined metal from his planned tariffs. So the 50% tariffs will apply to imports of semi-finished copper products from August 1st, but not to imports of the refined metal, which is a huge deal. And we saw that big move in copper pricing there. Also watching iron ore at the moment, a little bit of disappointment as we saw that readout from China, but of course looking ahead to some of the sort of industrial and economic policy that might come out of the next party plenum. Well, Rio Tinto shares will be in focus when we get to the open in Australia here. The miner posting its lowest first-half profit in 5 years on weak prices and trade uncertainty. Bloomberg's Paul Allen joins us now with more. So I guess we're taking a look ahead. Are they able to sort of turn it around, or is that very much dependent on the macroeconomy?
Yeah, and very much dependent on forces that may be beyond Rio Tinto's control. There is a new CEO, Simon Trott. He takes over August 25, so the next time we hear from Rio, he'll be in charge. And he's already said it's his job to cut costs, simplify the business, and the outgoing CEO, Jacob Stalsholm, said, look, that process is already underway, but there's more to be done. So analysts really questioning where that trimming is going to come. Maybe Rio will unload smaller businesses and sharpen its focus on some of those key commodities, and chief among them, of course, iron ore, which makes up by far the most of Rio Tinto's earnings. Now, that received about 15% less per tonne than the same period last year. There were disruptions from cyclones at the start of the year in Western Australia as well. So that really weighed on underlying profit. 4.8 billion was the headline number, down 16% on the same period last year. That was worse than expected. The dividend at $1.48, also worse than expected, although still in line with that 50% payout ratio that Rio targets. Bloomberg Intelligence, though, got a note of positivity, saying EBIT could rise 3 to 5% in the second half. That's if metals prices hold at their current levels, and as you were just describing, that's a big if.
And the big if, because we don't know what's going to happen with trade, but also China, right? Are those the two biggest factors that, are tied into their future fortunes?
Oh, absolutely. And Rio making a point of that, the tariffs remain the big near-term risk. And you were just talking about those copper prices there a minute ago. Unrefined or refined copper, I beg your pardon, now excluded from tariffs, and look at the impact on the intraday price. So, we now could see massive copper stockpiles in the US getting re-exported. Look, we just don't know. And the aluminium business for Rio as well, that took a $300 million hit due to US trade policy. And that's, not forgetting lithium as well. Separate to that again, prices are still really weak. That acquisition of Arcadium by Rio Tinto, that saw net debt rise to $14.6 billion over the half as well. Jacob Stalsholm, it's worth mentioning, did defend that purchase. He called it counter-cyclical, and he said, look, judge that in 3 to 5 years' time when the energy transition's really gaining momentum.
Thanks, Paul Allen, there with the latest on Rio Tinto. More ahead here on the Asia Trade. This is Bloomberg. We do have some breaking numbers coming out of the full earnings that we've been expecting from Samsung. We're getting quite a bit of disappointment when it comes to the second quarter net numbers. 4.93 trillion won. The estimate was for 6.37 trillion won. In particular, the chip operating profit coming in at 400 billion won. The estimate was for 2.7 trillion won there. So some pretty concerning numbers there. Of course, there has been quite a bit of optimism in terms of how quickly the company can expect to see that turnaround and start benefiting from a global AI investment wave that we've seen the likes of SK Hynix in terms of rivals of riding, and certainly we had that surprise announcement of that $16.5 billion chip-making deal with Tesla earlier this week, driving some optimism that this turnaround could come. Breaking down those numbers further, chip sales coming in at just shy of 28 trillion won. Their estimate was for about 28 trillion won there, and the mobile networks operating profit a little bit better than expected, 3.1 trillion. The estimate was for 2.56 trillion. The sales there also more or less matching expectations. In terms of guidance, we're hearing from Samsung just trickling through at the moment, saying they do expect AI demand to remain robust in the second half. We'll be seeing how this plays in, particularly with all of the trade headlines for South Korea at the open in just about 20 minutes or so. Of course, this forecast really very much being seen as a bellwether for consumer electronics demand for the second half of the year. We have seen quite a bit of pressure, of course, on that segment, particularly in light of these ongoing trade issues. Shery.
Yeah, we'll be watching Samsung at the open because we have seen already 20% gains for the month of July because of that Tesla deal that you mentioned, $16.5 billion in chip making. But take a look at how we're setting up for the Japan Open because the yen is holding at that 149 level. A little bit of strength against the U.S. dollar ahead of the BOJ policy decision today. Of course, the expectation is for no change. We had seen the yen really dropping the most against the dollar in the past 3 months among major currencies. Right now, there are more bearish calls on the Japanese yen on expectation that the BOJ will take a wait-and-see approach. The Nikkei futures to the upside of 0.3%. Perhaps some of those positive news on trade across the region might reverberate with some of these manufacturers. One company that we'll be watching today, the world's second largest supplier of construction and mining equipment, reporting first quarter operating income this week that missed analyst estimates. And Komatsu now saying that the reduced 15% tariff rate on Japan, agreed with President Trump, will still have a significant impact on its business. Joining us exclusively now is Komatsu CFO Takeshi Horikoshi. Takeshi, always good to see you with us.
Very serious.
So we have seen the reduction from threatened tariffs on Japan, but of course it's still higher than before. Tell us a little bit about what the implications are for your business and how you're calculating this into the next few months.
Okay. Well, actually, the impact of the tariff in the U.S. is very significant. When we announced our forecast for this year, we forecasted, that the total payment we are going to make for this year on the U.S. tariff issue is about $1 billion per year. And by following the several changes made by the Trump administration, including agreement with Japan, we have recalculated the figure and come up to the number that, there will be a reduction of $200 million per year, but still we need to pay $800 million this year. And because we have inventory already existing in U.S., so by taking into account this buffer impact to inventory, the final figure we will suffer this year as a PL figure is $550 million.
You're talking about the tariff costs here, but what about the demand picture in the United States? Because businesses and households are also seeing the impact of these increased costs. What are you seeing in terms of your business performance there?
Okay, well, this year we are on a global basis on the construction equipment, we are forecasting 0 to -5% of demand decrease. And the demand decrease can be seen in the United States and also, North America and Australia and also Japan. And in case of North America, decrease of demand started last year, in fact. This is because of the excess of stock at the distributor and also a delay of the reduction of the Fad'l fund interest rate cut, in fact. And this year, we are forecasting a slight decrease of demand in U.S. But as far as we take a look at the figure, that we think that the demand remains relatively stable despite the OPEC situation caused by the tariff.
It's interesting you mentioned Australia. What's the business demand and sales demand looking like when it comes to Australia and broader Australasia or Oceania?
Okay, well, in Oceania, Australia, there's a difference between construction and mining. And if I talk about the construction equipment, demand decreased since June 2023 when the Australian government stopped the economic stimulus package as a countermeasure for COVID-19. And as for mining, it has been always good, and even this year, and irrespective of the tariff impact caused by the Trump administration, that the impact doesn't happen to our Australian demand in mining equipment.
I know that China makes up a relatively smaller part of your business, but I wonder if you can give us any insight into the level of market demand and sentiment at the moment, because we have seen broadly data showing that construction equipment purchases have been rising there.
On a global basis? On a global basis, as I said...
for the China market specifically.
China market, well, actually, the China market, we can see an increase of demand slightly second half of last fiscal year. But this year, well, contrary to our expectation that there was a demand decrease from April to June so far. So I can say that that the demand in China is not so significant.
What about other markets? Are you finding any bright spots around the world?
Yeah, we can see some start of recovery in Europe, especially. Well, we've been suffering the decreased demand in Europe for a long time, but since second half of last fiscal year, we have seen some kind of sign of recovery. And even though we are focused a little bit the decrease of demand this fiscal year, I think that it will grow and increase again.
Here in Japan, of course, we have seen a slightly stronger yen, although I shouldn't say that because we're now headed towards 150 back again. But how do the currency fluctuations impact your business?
Well, actually, because we are enjoying the cheap Japanese yen for almost 3 years, and in spite of the demand decrease, we've been set records on the sales and the profit for 3 consecutive years. But due to, as I said, the U.S. tariff impact and also relatively unfavorable Japanese yen, we need to forecast the decrease of sales and the decrease of profit this year.
Who are your biggest competitors around the world? Because when we talk about tariffs for the United States, we're also talking relatively to other countries. For example, South Korea just today got a 15% rate, which would equal that of Japan. But are there any competitors and any relative benefit to you having Japan agree to this 15% tariff?
Well, that is very difficult to say. But our biggest competitors, of course, Caterpillar. And when we take a look at their the structure of the import, in the U.S., is according to our analysis, they are also importing more than 50% of the components, parts, and machines outside the U.S. The situation is the same for us. So that even though we will suffer, the other peers will suffer. So that as for a competitive scene, that we cannot see. Actually, we hope that there will not be a big change in a competitive scene.
Yeah, it's all relative, right? Just quickly, any changes in your manufacturing or import-export outlooks given the tariff situation?
Well, we are trying to digest the tariff issue within the context, within the framework of what we call the cross-sourcing. We have 50 plants in the world. And, by using a common bill of material and also a common production procedure, we can change the production location from one place to another. And by using this cross-sourcing, we are trying to maximize our gross profit and also minimize the investment on a global basis. And on a tariff, we try to mitigate within this context.
Takeshi Horikoshi, really good to have you with us. CFO of Komatsu here, joining us with the outlook for his business, of course, as we're also getting right now breaking news out of Japan. We are getting the industrial production numbers month on month growing 1.7%, which is a beat for the month of June, and also rising after a contraction in the previous month. Year-on-year basis is also a beat, 4% growth. Retail sales also coming in higher than economists had expected, growth of 2% instead of 1.8%. A little bit of a slowdown from the previous month, but remember, we are facing inflationary pressures here in Japan as well. These economic numbers coming, of course, on a day when we do have the Bank of Japan policy decision. No change expected there. Right now, we're factoring in just industrial production numbers beating expectations and retail sales also beating expectations, but slowing down a little bit from the previous month. This is Bloomberg.
Just taking a closer look at those Samsung numbers with the earnings that just came through, and a big disappointment when it comes to the chip arm, of course, a big profit miss and a sign of what is that widening crisis, and perhaps taking away some of the enthusiasm over this deal with Tesla that had boosted both its share price and investor sentiment in terms of hoping that that turnaround could be more imminent than previously expected. We've seen gains of over 20% in July. If you take a look, but this shift when it comes to Samsung's foundry business appears to be still struggling with the semiconductor division reporting operating profit of 400 billion won for the June quarter. Totally missed analyst average projections for 2.73 trillion won. There was a one-time inventory cost due to U.S. export controls. That led to operating losses, but the losses are expected to narrow in the second half of the year. And, of course, they did win that $16.5 billion contract from Tesla to make AI chips that could meaningfully improve its prospects for winning more clients, validating its technology for the 2-nano mass production, and also just broadly playing catch-up to rivals, the likes of SK Hynix there as well. But we are watching for that market reaction, Shery, when we get to the open in Korea.
Yeah, not just South Korea, but also Japan and Australia, of course, and some of those stocks that we'll be watching. Samsung, you can see that its last close was also to the upside, but after 20% gains already in July because of that chip-making deal with Tesla. And we had seen downside pressure for Nissan already, but we are now hearing of more losses given their turnaround efforts and, of course, the challenges coming from the trade picture. They're now forecasting 180 billion yen in operating losses for the April to September period. They also withheld guidance for the fiscal year. Their turnaround plan includes a 20,000 jobs cut and also reducing manufacturing sites from 17 to 10. And we'll also be following SoftBank. This, of course, after ARM's first quarter results and outlook showed signs of spending really starting to hurt profits. We have seen lower than expected profit forecast for the current period after ramping up spending on those new products, Heidi.
Take a look at how South Korean futures are pricing all of this in a lot for investors to kind of mull over from the 15% tariff pact that we've been looking at. The investment promises that have been made, but of course not a lot of detail coming through so far in terms of what compromises and pledges have been made as part of that deal. The agreement to cut auto tariffs is one of them, but we will be watching the Kospi, I should say, as it comes online in the next few minutes or so, in addition to that broader impact of the chip numbers miss from Samsung. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens as we're still getting our heads around those latest trade negotiations between the U.S. and South Korea. 15% tariffs announced on South Korean goods, Heidi, at a time when President Trump is threatening 25% tariffs on India. And of course, let's not forget, it was Fed Day, no change there, and we're headed towards Bank of Japan Day as well.
It's a rare day that we have the Fed news and the Bank of Japan almost sort of contesting with the broader trade headlines. We also have Samsung numbers, of course, watching for the reaction, Shery, when it comes online, given that big miss in its chips profit.
Yeah, we'll be watching the reaction in the Japanese markets as well to all of these trade headlines, not to mention, of course, as we head towards the BOJ policy decision. We saw the Japanese yen gaining in the overnight session, but of course, we have seen significant weakness already for the last 3 months, losing the most among major currencies against the U.S. dollar. And the BOJ today expected to hold rates steady. Will this apply additional pressure to the Japanese yen will be a key question. As we're seeing a little bit of strength, the Nikkei is also gaining 0.2%. We saw June industrial output rising 1.7% month on month, which was a gain instead of a contraction that was expected by economists. We're also following, as Heidi mentioned, Samsung. Take a look at how the Kospi is coming online, because we had seen gains on the Kospi and also on the Korean won in the previous session. Of course, today we'll be digesting the trade news, 15% tariffs on South Korean goods, including the auto sector. We had seen Hyundai just rally in the pre-market session. You see Samsung Electronics gaining 0.3% as the Korean won is also seeing some upside, Heidi.
Take a look at how we're faring in Australia. We're watching for Rio Tinto on some of the sort of less positive news flow there, particularly when it comes to prospects for a turnaround in the second half on account of a lot of these China and broader global trade macro uncertainties, right? We're seeing the ASX off by just about 0.5% at this point. The Aussie dollar, 45 is we're holding, so under that 65 US cent level. We're also waiting to see sort of some of the policy priorities as we get China setting up for its next next plenum meeting there as well, so expecting some sort of economic and strategic direction out of that political conclave. But as we continue to watch the repercussions for Australian bonds and Kiwi bonds, given the action we saw in Treasuries, take a listen to what we heard from the Fed chair overnight.
The economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate.
Let's bring in Naomi Fink, Chief Global Strategist at Nikko Asset Management. Naomi, always good to have you with us. Now we have the Fed behind us. We have the BOJ ahead, but no change expected there. Can we expect the markets to take all of the latest trade news positively and just find an excuse to rally again?
Well, at least if we take a look at better than expected data out of the U.S. and Japan, then it does appear at least that some of the fears, at least immediately, aren't manifesting. The only thing is that markets have rallied quite a lot already after the Japan trade deal, possibly in excess of the good news presented by that deal. And what we've seen with Korea is very similar. It seems like 15% is the level that signals not as bad as feared. So a lot of that is priced into markets at the moment. So right now we probably maybe need additional news to go any further. And conversely, it's possible that we're a little bit overstretched and we might be vulnerable to corrections if we get bad news.
Where would the catalyst potentially come from?
Well, we do have economic data coming out from many directions. We still have some out of the U.S. later this week as well. So I think we could still get minor corrections if we do have disappointments. If, for instance, the market decides that yes, we had strong data, but that also disincentivizes the Fed from cutting anytime soon, then the stock market can get a little bit wary. That said, it's not as if we saw anything that is really groundbreakingly bad news, so it's possible that just supply and demand conditions and overstretched positioning might correct a little bit, but so far we haven't seen any large catalysts to make any structural change.
The Bank of Japan continues to normalize policy or hopes to. What sort of implication does that have for the markets here, which, as you said, have already been pretty stretched?
Well, the Bank of Japan's policy is accommodative, and the Bank of Japan has said this many times, and there are many signals in the market and in economic data. For instance, inflation remains above target and has been above target for quite some time. So even if the Bank of Japan has the luxury of waiting, of timing the rate rises, we're still on a rate hike trajectory. So the Bank of Japan probably doesn't want to put it off forever because we are above target and households are feeling the pinch of inflation. So eventually the inflation is the central bank's bailiwick, and the Bank of Japan's mission is going to be to keep prices stable. So in order to do that, they at some point do need to hike rates.
What do you make in terms of the relief rally or the complacency rally that we've seen in many other markets, but perhaps haven't played out when it comes to Europe and Japan, despite these two countries or areas now having trade deals? Does that change the investing outlook at all when it comes to having these deals now kind of at least taking shape?
Well, I would probably de-emphasize smaller, shorter-term moves at this moment because there can be some overextension and correction in various markets. What I would say is that if we take a look at valuation in U.S. markets, that's palpably higher. It's very visibly higher than valuation in Japan or in Europe. So if we're looking for a vulnerability to some large catalyst, I don't know what it is yet, then the U.S. is probably more vulnerable than Japan or Europe, which is valued a lot more conservatively at the moment. I think that there are probably some strong structural arguments in Japan and in Europe that are not bearing as spectacular immediate fruit as, for instance, some of the recent earnings in the U.S. tech sector. That said, we shouldn't discount that structural improvement over time, and these markets might prove areas for valuable diversification if we do have U.S. equity-heavy portfolios, as most equity investors probably do. So I wouldn't look at it as a zero-sum game type thing, but I would see, even in the less exciting markets in Japan and Europe, some real structural improvement stories that's worthwhile participating in.
Does the US exceptionalism story kind of persist despite all of the talk about its demise, or do you see perhaps some further upside for some of the arguably undervalued markets like China?
Well, if we take a look at the, I guess, the idea of exceptionalism, yes, the U.S. has been exceptional in many ways, and part of that has been this above-trend growth post-pandemic. And we've seen a lot of investment into the U.S. to compensate, and we have seen that valuation rise. The only thing is that sort of already happened, so it's really more important what happens in the future. And with valuations at current levels, it's not for certain that we will see that follow-through, the performance on all of these hopes for things like the technology, AI, to come before, for example, a U.S. recession. It's possible, and I think very probable, that the investments made to date in technology in the U.S. will bear fruit and productivity in the U.S. will rise more broadly. It's just that that hasn't happened yet, and most likely economic cycles aren't dead. So it's a bit of a horse race between what comes first, that broadening of productivity in the U.S. or recession. And if it's recession, that doesn't mean that the productivity broadening won't happen. It's just that it's going to be a bit of a rockier path to get there.
We have seen a little bit more focus on Chinese tech companies, but given, of course, talking about economic cycles, the downside there, is this a market that investors should still be watching at the moment?
Well, I think China is too big an economy to ignore. And I think at one point when investors were looking at China as uninvestable, that we had gone too far. China does have some problems, for example, deflation and weakness in the consumer sector, and that's still deflating property market. That said, China has some options, for example, offering fiscal stimulus, especially for consumption. I know that China has been reluctant to do this, but that might be a good solution going forward, especially given what's going on the trade side. Domestic consumption is a pretty good buffer when you do have external uncertainty. So I think they still may go there, even despite the reluctance to date. And that would be supportive for both the Chinese economy and assets.
Naomi, always great to have you with us. Naomi Fink, Chief Global Strategist at Nikko Asset Management. Let's get some more in terms of President Trump's trade deal with South Korea that imposes a 15% tariff on its exports to the U.S. With us now is Troy Stangarone, who's a non-resident fellow at the Carnegie Mellon Institute for Strategy and Technology, where he specializes in Korean economics and foreign policy. Troy, really great to have you with us, particularly to react to this latest news about the tariff pact and what sounds like a significant amount of investment pledges that have been made as well. What do you know about this agreement? Because so far, not just with the Korean deal, but also Japan and the EU and some of the others, it's often quite scant on the details.
No, yeah, this is still a developing story. We're still looking at the details right here. What we know so far is Korea is pledged to invest through a fund $350 billion, likely in areas dealing with semiconductors, secondary batteries, biotech, and a few other areas, but areas where Korea is largely well-placed to invest in the United States. And so you fold that in together with an announcement of purchases of about $100 billion in LNG and other U.S. energy products. And that seemed to be, at least from what we can tell so far, what was able to get Korea over the finish line and at least pull them even with the EU and Japan in terms of tariff rates.
Some of these concessions, as we've seen with the other deals, are hugely domestically, politically unpopular, right? Particularly when it comes to agri. Do you expect that to be able to go through from the perspective of having that domestic support?
Yeah, I think this is the challenge here. We haven't seen all the details, and if there are any lifting of non-tariff barriers in Korea related to agriculture, because Trump said that agriculture would go in duty-free. Most agricultural goods are already at that point, but there are some things like rice, which is sensitive in South Korea. We had the issue, which we haven't seen anything about yet, of beef over the age of 30 months, which is sensitive as well. And so there could be some domestic political challenges here, depending on what some of these details end up being. But I think on the whole, this is an important step for South Korea. And I think these are things that can be manageable given what the consequences would have been if the tariff rates were much higher.
How will President Yi use this trade deal? I mean, he's been in office only for a few months. Is this a win for him?
I think it is. Right now, you can look at this and say Korea had a 0% tariff rate with the Chorus FTA, but the reality of it is that the Trump administration doesn't view the world that way. We're in a new world. And so to take and reduce these tariffs are significantly important for South Korea. Autos are about a third of South Korea's exports. So for Hyundai and Kia and GM Korea, this is a significant win to be able to at least get down to 15%, below 25%. Semiconductors, another huge export for South Korea. Steel, we haven't seen anything about it specifically, but if steel were to be at 15%, that would actually be a win because the EU wasn't able to achieve that. And so this could be actually significant, even though we're in a new environment and these numbers look high. Given the environment, this could be a very good deal for South Korea.
Yeah, it would have been really painful for South Korea if Japan, which it competes with when it comes to exports to the U.S., got a better deal than them in terms of tariff rates. But when it comes to the geopolitical angle to these trade negotiations, President Lee just saying that this will strengthen the alliance between Washington and Seoul. What's the state of the relationship right now, especially after it being roiled by these trade negotiations and South Korea seeing a change of government?
This has been an interesting development. Because of the political situation in South Korea, the Trump administration had largely left South Korea alone. There hadn't been much comment. There were, with the acting government, some negotiations on the trade issue, but those really picked up steam under the current government, the new Lee administration. But I think this is a potential to take and help put the relationship on the right foot. We have still issues to deal with related to North Korea, the North Korea-Russia relationship, where we're seeing technology transfers from Russia into North Korea that are making North Korea a more lethal adversary. And so there are important issues to take and move forward on. And hopefully with the trade issue now set aside, and we know that probably sometime in the next 2 weeks, Lee Jae-myung and President Trump will meet. Hopefully that will take and allow them to, one, discuss these issues, but two, hopefully move them forward in a productive manner.
That's an interesting sort of way to look at the broader bilateral relationship, Brian, because do you think with the willingness to put everything on the table at the same time, to, conflate some of the security and defense issues with trade, as we've seen, does it make those issues sort of easier to progress on after this, now that trade is out of the way?
I think it can. We know there are basically two things that President Trump cares about. One is ensuring the United States gets a fair deal on trade, and two, that equal burden is shared on the security side. And because Korea was willing to discuss both of those at the same time, and we haven't necessarily seen a lot on the security side out of this, if there is some of that involved, but I think that willingness will help take and smooth some of the rough edges in the relationship over and move things forward. And it is going to be important to do that, because when we think about even on the investment side, we look at the Ukraine war, you can see there are gaps in the United States domestic production abilities. And whether it's shipbuilding, where we see a lot of focus, but even things like artillery, these are areas where Korean investment could help. And so where we might be seeing some blurring of security and economic, this could be a win-win for both the United States and Korea.
Yeah, we had heard from South Korea that the security issue will be discussed during a President Trump and President Lee summit later on. Troy Stangarone, great to have you with us, non-resident fellow, Carnegie Mellon Institute. As we are now watching how South Korean markets are trading, because it's interesting, we saw that pop at the open, given, of course, the trade deal, but we're seeing a little bit of those gains being pared back. And you can see Hyundai Motor and Kia, in fact, losing ground after South Korea secured a 15% tariff rate from the United States when it comes to automakers. Here in Japan, we're also following Nissan because they just reported earnings, and they're now warning of more losses on their turnaround plan. Remember, that will see it cut 20,000 jobs. They're now forecasting $180 billion in operating losses for the April to September period. Heidi.
take a look at what we're watching when it comes to this copper story, right, which was really one of the biggest moves that we saw overnight. It was less about what was tariffed and what was more about what was exempted for the refined form of copper. We saw the U.S. copper market suffering its biggest intraday fall on record after the exemption of refined copper metal from its planned tariff. So we are seeing quite a downside reaction there, particularly when it comes to the likes of BHP, off by just about 2%. Rio Tinto, of course, contending with some of its own numbers being disappointing and the uncertainty going forward when it comes to the ability to stage a turnaround too, as the profits drop, the trade tumult really hitting miners more broadly. Weaker prices for iron ore despite the recent sort of comeback. Coal also putting pressure on the industry and putting pressure to cut costs and create more productivity, but a big question mark on whether that can be achieved in the second half. More ahead on the Asia trade, this is Bloomberg.
Take a look at how chip stocks are trading across Asia. Also watch SoftBank because it's a major stakeholder of ARM. It's tumbled after spending surged. It announced lower than expected profit forecast for the current period. They are ramping up spending on new products. We already had Qualcomm also falling in late trading after reporting lackluster growth. Microsoft, though, surged given better than expected earnings. But of course, we're also following the latest on Samsung as well. Unchanged at the moment, but this after they reported second quarter net that came in below economists' estimates at 4.93 trillion won. Their semiconductor division operating profit at 400 billion won for the June quarter, missing estimates as well. For more, Asia equities reporter Sang-Mi Cha joins us now with the latest. So what stood out to you in the Samsung final numbers?
Shery, the operating profit fell below the projection from analysts, largely because of the export controls from the U.S., because its foundry arm actually heavily relies on the Chinese demand. And so we have seen that it's unchanged right now, the stock price, and that's because the market has been quite expecting this move, and we have seen the results in the preliminary earnings as well. But a lot of the investors were saying that when you see the profit being bad, but the stock doesn't fall, that's what you call bottom. So that's what has been definitely driving the market. What's really been driving the market for Samsung has definitely been the Tesla deal that we have seen on Monday, $16.5 billion over the course of 8 years. Some say that it's not really significant when you really break it down to annual numbers, but it is a big deal when it comes to its foundry business that a lot of the investors have thought was actually dormant, because now that boosts that confidence that foundry business, chip making part of business for Samsung actually has hopes there. Of course, it will also boost the utilization for its Taylor plant in Texas, and a lot of things are looking more like an upside for Samsung right now.
Are there broad notes of caution perhaps being felt for the whole industry, given we had the Goldman downgrade of Hynix as well?
Yes, there were several downgrades, definitely, and of course there are some of the spread that we have been looking at. The price target that the analysts have put out there, we see that there's almost no upside there. The gap is the tightest in 4 years, so we can definitely see that a lot of the analysts are betting that this is maybe what we're as good as what we're seeing. But again, the investors are saying that we have to look at the future for Samsung. And when it comes to that, of course, the high bandwidth memory is where the focus is right now, because Samsung has been struggling to get that qualification test from NVIDIA, and of course losing ground to SK Hynix when it comes to the advanced HBM. But again, there's some upside here when it comes to, for instance, the talks around the H20 AI chips to China. Now that NVIDIA can actually, provide that to China, whether that would actually benefit Samsung, because a lot of Samsung's HBM3, which is a lesser advanced high bandwidth memory, has actually gone alongside H20 in the past. So there are those elements. Again, some Bernstein analysts have said that by 2027, perhaps the NVIDIA market share will actually be divided by SK Hynix and Samsung evenly, each taking about 38%.
Bloomberg Sang-Mi Cha there. Let's get you caught up with some of the other corporate headlines that we're following today. And Qualcomm shares falling in late trading after it reported weaker than expected smartphone chip sales. Phone-related revenue rose just 7% to $6.33 billion last quarter, missing estimates. The results added to fears that a broader chip rebound may be short-lived. ARM shares fell in late trading after the chip designer forecast weaker than expected profit. The company says it's ramping up R&D to chase AI growth, with second quarter earnings projected at 29 to 37 cents a share, which was below some estimates. CEO Rene Haas says a spending surge is affecting profit in the short term. China's CATL says profit rose 34% in the second quarter to $2.3 billion as it shrugged off weak EV demand and falling battery prices. Revenue fell slightly short of the consensus estimate of $13 billion. US tariffs have added to the uncertainties facing Chinese suppliers. More ahead on the Asia trade, this is Bloomberg. Take a look at how we're shaping up when it comes to European futures. Trading online at the moment, a little bit of mild optimism as we get further progress on trade. The latest pact being announced, of course, a 15% tariff deal with Korea. Euro Stoxx 50 futures as well as German DAX futures just shy of about 0.2% higher there. It was a pretty frenetic session when it comes to earnings digestion. In the previous session, investors had also been waiting for the outcome when it comes to the Fed policy decision. So we did close largely flat for most of these regional equities. We did see better than expected numbers out of the likes of L'Oreal, Danone. HSBC, though, was a big counterweight, though, and we did also see disappointment out of numbers from Adidas. We're seeing the euro up by just about 0.25%. So one thing to watch out for is to whether European assets sort of come through this holding pattern with some of the uncertainties when it comes to the Fed being resolved, at least for this month. More ahead on the Asia trade. This is Bloomberg.
Korea, as you know well, has always been very challenging on trade for the United States. We've had an agreement with them in past years, but our trade deficit with Korea has continued to be extensive. However, President Trump has raised the natural leverage of the U.S. market to really obtain some significant concessions from the Koreans.
US Trade Representative Jamison Greer there. Take a look at how Asian markets are reacting to really frenetic news flow, right, from the Fed decision overnight to, of course, the announcement of the Korea tariff decision, 15%. And we're seeing that upside when it comes to most Korean assets. It costs me up about 0.3% there. The Nikko 225 also seeing some gains of 0.4% as we head into that Bank of Japan decision. Here in Australia, though, we're seeing some of those miners being dragged lower. The big move in copper prices overnight with the exemption of the refined form of the metal from Trump's tariffs really roiling those copper markets, and we're seeing some of those miners, including Rio Tinto, which is also contending with softer than expected numbers, being a counterweight there. Well, President Trump also says the US will impose a tariff of at least 25% on Indian imports starting Friday, although he later added that the two sides were still in talks. Let's bring Lisa Curtis, who's a director of Indo-Pacific Security Program at the Center for a New American Security. She previously served as a deputy assistant to the president and NSC senior director for South and Central Asia during the first Trump administration. Lisa, really great to have you with us. And so clearly there is an element that these two sides are in the process of negotiations and haggling at the moment. But do you expect these talks to be tough? And does that really come down to the Russian energy relationship with India?
Well, I think a couple of weeks ago, everybody was confident that the U.S. and India would come to a trade agreement. In fact, we thought that the India trade agreement would be one of the first ones that Trump concluded. However, in the last few days, there were signs of trouble. And I think probably the main sticking point is U.S. wanting more access to India's agriculture sector. And this is really a tough area for Prime Minister Modi. This is very political politically sensitive, and it's not something where he really has the ability to make concessions. So I doubt that we'll see a trade agreement by August 1st, but we do know that the two sides will continue to negotiate. There is a U.S. negotiation team going to New Delhi at the end of August. So I think we still might see the two sides come to a trade agreement, but probably not by this Friday.
What do you think the contours of that agreement will look like, given that we've seen some sort of best-case scenarios, if you will, for some of these other trading partners like Japan and Korea? Is the India talks likely to be much more contentious?
I think that's right. I think that the Indian side is worried in seeing the kind of concessions that Japan, Indonesia, and others made to get the trade agreement. And I think they didn't really expect to have to go this far. They were getting positive signals from the Trump administration. Like I said, a couple of weeks ago, Trump was talking very positively. So now I think that President Trump has felt emboldened by the kind of concessions he's been able to get out of other countries. So now the expectations for India are higher. And so it's put India in a very difficult position. But India is an important strategic partner for the United States. And I think that the Trump administration will have to take that into account. India is a very important partner. The Trump administration, during its first term, really elevated the U.S.-India partnership, so they wouldn't want to lose those gains. And I think that will have to factor into these trade negotiations.
You said it. I mean, we saw Vice President J.D. Vance's very high-profile visit to India. We saw Prime Minister Modi coming to the White House in February as well. So where did the Indo-Pacific strategy from America go? I mean, they were supposed to be a counterweight to China.
Yes, I think what you have said is correct in that the relationship started off on a very strong footing. Prime Minister Modi came to the White House in February, one of the first high-level visitors to the White House. The vice president visited India. But shortly after the vice president's visit, we had an India-Pakistan conflict. And I think the aftermath of that conflict has contributed to the strain that we're seeing on the India-U.S. relationship. President Trump claimed credit for a ceasefire between India and Pakistan. He talked about mediating the Kashmir issue, which is really a no-go area for India. That's not something that India wants. It very much objects to any kind of third-party mediation. And the fact that President Trump had the chief military officer in Pakistan, the Field Marshal Asim Munir, came to the Oval Office for a meeting. These things have irritated India, and they've put some strain on the relationship. So I think, we're seeing multiple challenges to the U.S.-India relationship right now, and trade is one of them. And we haven't even talked about Trump's comments on India's energy imports from Russia, which is another issue. Trump has said that he will put unspecified penalties on India for its continued importation of Russian energy and Russian military supplies. So that is yet another sticking point in the U.S.-India relationship. So lots of challenges right now.
I mean, we know that President Trump usually is very bold when it comes to rhetoric, when it comes to talking about trading partners, even about domestic politics. He has talked about Brazil. He has talked about domestic politicians, given advice to Keir Starmer about how to appeal to the UK public. So this doesn't seem to be anything new. So how much does Prime Minister Modi at this point need this deal that he can endure all of the comments from President Trump, as you said, especially with the Pakistan conflict?
Well, I think there are mixed views on how much India needs the U.S. trade deal. India did just complete a trade deal with the UK, something that had been under negotiation for 3 years. India is also seeking a trade agreement with the EU. So India does have some options, but the U.S. market is extremely important to India. India exports a lot of goods, pharmaceuticals, gemstones, other items to the United States that are important to its economy. So I think, India will try very hard to get a trade deal with the United States. But I don't think that Prime Minister Modi would go as far as giving the United States market access to its agriculture sector. I think that would be a step too far for Prime Minister Modi. And in the end, I think his, political survival and, his domestic standing is more important than getting a U.S.-India trade deal.
Lisa Curtis, really good to have your insights, senior fellow at CNAS, as we await those updates on the conversation between India and the U.S. as well. President Trump also hinting at progress in Washington's tariff negotiations with China. Speaking at the White House, he sounded optimistic about a deal after meetings in Stockholm this week.
We're moving along with China. We're doing fine with China. I think it's going to work out very well. We're right in step. I think we're going to have a very fair deal with China. Thank you very much.
Yeah, we'll get more on those trade negotiations, not to mention, of course, the upcoming Bank of Japan policy decision as well. We have more ahead on the Asia trade. This is Bloomberg.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Fed Chair Powell, as the central bank holds rates while downgrading its view of the economy, we saw Treasury yields gaining ground on those comments, with the Fed holding and really not giving a clear indication of an immediate rate cut. We are seeing JGB yields also following that move by Treasuries, and the Nikkei holding at gains of about 0.5%. We're seeing industrials and healthcare, energy also leading the gains in the Japanese session, as the Japanese yen is also strengthening a little bit against the U.S. dollar. Of course, we are awaiting the Bank of Japan policy decision. The expectation is for a hold here in Japan as well, as we digest the latest industrial output numbers also out of the country this morning, rising 1.7% month on month. The estimate was a contraction, so we're seeing better than expected figures. Retail sales also coming in above economists' expectations. Let's bring in Ayako Fujita, Chief Japan Economist at JPMorgan Securities. Ayako, great to have you with us. It seems the consensus is for no change from the BOJ today. So what will you be watching?
This time is clearly the focus is BOJ's outlook report, how much they're going to revise up their inflation outlook, as well as a message from the governor. Because BOJ clearly actually overreacted to initial tariff announcement in May meeting. So BOJ revised down actually inflation and growth focus substantially in May outlook. But probably actually this meeting is going to be kind of for BOJ's reset for actually next rate hike. So they probably certainly need to revise up inflation forecast, and actually they have to mention that policy normalization is coming and rate hike is coming probably within a few meetings.
How many meetings?
My best guess is October, because October seems to be relatively comfortable, convenient meeting for BOJ, because October is also outlook report meeting, so BOJ can easily justify why they need to hike rates. But of course, if dollar yen moves higher, keep moving higher, and well above 150, okay, we are almost get there.
Yeah, we're almost there.
Almost there. But if we see actually kind of pressure for dollar yen, actually there is some chance that that BOJ could move earlier. But also we also have a flip side of risk as well, because domestic political situation is a little bit uncertain. So if we continue to see actually kind of a little bit of political instability, and if actually potential LDP leadership election or kind of forming actually new government may fall into the October meeting timing, BOJ may be probably forced to delay their move to December possible.
How important will the Japanese yen be, especially given, of course, that you need some sort of signaling that you're making or bringing forth this rate hike? I remember what happened last year in July when we saw this huge surge.
Yeah, I think actually this time, actually, since inflation is running actually around the 3% level, and of course, if we take into account actually all the policy-driven drag, actually, the actual inflation is well above 3%. So maybe actually, BOJ may not have actually much tolerance actually for additional yen depreciation. So if yen continue to depreciate, I think that will be definitely a pressure for BOJ to move early.
Ayako, does the agreement, when it comes to trade at least, remove some of the uncertainty from the outlook?
Yeah, certainly. Actually, the BOJ actually has been waiting for a trade deal coming up. So, since actually we got trade deal actually last week, so and the deal was not particular, but actually I think actually it's a great deal for Japan because Japan get lower rate compared to other competing countries. So, which means that actually probably I think BOJ certainly have to admit that actually uncertainty has been declined quite significantly. But of course, at the same time, actually BOJ cannot say actually uncertainty has been removed entirely, because if BOJ admit uncertainty is gone, then actually they have to raise rate in this meeting. So I think actually probably BOJ will focus remaining uncertainty about related to actually U.S. growth in the second half.
Do you think enough progress has been made in terms of narrowing that gap between household confidence, household spending power, real wages, and the surge that we've seen in inflation?
I think in terms of real wages, I think actually gap is narrowing these days because, of course, we have actually no statistical problem in wage data. But if we look at the data, actually, even last year, we saw actually a significant rise in saving ratio, which means actually the real income itself may not be a main actually reason for consumer to become relatively confident. So I think actually the biggest factor for consumers' confidence is really inflation, and that actually people get really freaked out with high inflation because actually 3% or well above 3% level of inflation is quite a big shock to household, and that also affect to actually political instability. So I think all of these kind of things taken into account, actually the reasonable policy reaction for Japan right now is having a little bit of policy hike and containing inflation. That will certainly help the economic recovery.
Ayako, how long does it take for the Bank of Japan to be able to assess the impact of these new tariffs? Because when I speak to people within the BOJ, there's a lag time between you get that 15% tariff rate and how businesses and households are behaving because of the new rate.
I agree. Actually, of course, actually, this is kind of a unique case actually for everyone in the global economy. So BOJ themselves get a little bit confused probably actually how we should assess this tariff impact. But compared to May outlook report timing, because in May actually BOJ was very much negative about tariff rate because they claimed that actually maybe this is going to be a very big shock to corporate, sentiment shock to corporate, and corporate may be forced to absorb all these tariff costs by squeezing margin. That was the kind of assumption as of May. But now actually we got more kind of data related to corporate sentiment, and also actually the tariff deal actually corporate made already actually a quite positive actually statement on this tariff agreement. So I think actually sentiment wise actually particularly for large firm sentiment actually BOJ should have already gained a little bit of confidence.
What about the fact that earlier this year we were also talking about the market volatility, especially in JGBs, and how the normalization policy of the Bank of Japan was also having an impact on these yields rising to multi-decade highs? We saw the Bank of Japan adjusting some of those bond purchase commitments for next year as well. Is that at all factor in the BOJ's thinking about the normalization process for the next year?
I think actually BOJ is already pretty much committed to normalize actually JGB market functionality and policy as well. So even though actually BOJ saw the pace of the actually JGB purchase reduction, but actually loan off amount is going to accelerate for next year. So basically, actually, BOJ's signal is actually BOJ is moving forward with actually policy normalization. Of course, actually, pace matters, but if we assume that 2% as inflation will be sustained for long, and actually monetary policy short-term rate will be normalized, I think still actually 1.6% 10-year bond yield is significantly lower than probably equilibrium, right? So I think the BOJ understand that the rate need to go more, but at the same time, of course, actually, the decent actually back-end problem is a little bit of actually kind of noisy and a little bit actually risky. But unless actually we see clear kind of signal that we're going to fall into systemic problem, actually BOJ will not step in. And probably actually BOJ will already send signal to Ministry of Finance to adjust their issuance program. This is actually more kind of reasonable actually policy reaction in this kind of environment, because still actually the back-end insurance is probably still too large.
Ayako, Fujita, really good to have you with us, Chief Japan Economist at JPMorgan Securities on a very consequential BOJ day. The decision, of course, will be discussed on T-Live Go on the Bloomberg, so subscribers can turn in to your terminals for that. The expectation right now is for no change, but you'll get commentary and analysis on what to watch in today's decision. We have more ahead. This is Bloomberg.
Bursa Malaysia CEO Fad'l Mohammed says he's optimistic about Malaysian markets, even with the country's stock benchmark stuck among the world's worst performers this year. Speaking to us exclusively at the Bloomberg Sustainable Business Summit in Singapore, Fad'l discussed his outlook for listings and how tariffs could impact the local boss.
Tariffs inevitably will change the way companies do business. And I think it will reshape in terms of global supply chains. That's inevitable. But I think it will open up new opportunities for partnerships, for collaborations. And I think that will create a lot more innovation for companies. So for Bursa, I think we remain optimistic. We are optimistic. Quite clearly, Malaysia's economic fundamentals are intact. We see GDP growth 4 to 4.8% for 2025. KLCI is trading at a 17% discount to its 10-year average. We are also seeing very strong liquidity because a lot of the funds are sitting on cash, and I would see that they're sitting on cash,
waiting to be unlocked. Exactly,
and sitting on cash at the highest amount since January 2024. So we will be seeing a lot of those liquidity coming back into the market.
When exactly?
Quickly.
When do you think trading?
So I would sense that, in my view, for a lot of the asset managers to be able to capture the cycle, I think when valuations are low is when you come in, and of course to be able to capture the cycles when markets are on the upside, and I think Bank Negara also recently reduced interest rates by 25 basis points. And I think quite clearly we will see a lot more liquidity coming into the system. So yes, I'm super optimistic about Malaysia's second half 2025.
Do you think roughly this is going to be a fourth quarter or a third quarter kind of story?
We'll probably see traction coming through within the fourth quarter onwards.
How else do you think large companies can be encouraged to list in Malaysia?
So there are a couple of things that we're looking at. One area for sure is to look at potentially secondary listings. We want to be able to see companies, and we want to have regional companies looking at secondaries potentially coming into Malaysia. So that's one. The other one is, of course, as we drive the conversation earlier on energy transition, we will see companies within that space looking at capturing the capital markets. And some of these will be the large companies. As they build out, as projects have actually come through, where there are sustainable cash flow generative income, they will be looking at the capital markets to IPO. So that's the second area. The third area, as you know, Malaysia has been actively pushing and driving in terms of the semiconductor space. So there are a lot of players within the semiconductor ecosystem that are also ripe, and we can actually take them out, bring them out into the capital markets to list them. So these are some of the very core areas that we've been pushing.
Bursa Malaysia CEO Fad'l Mohammed speaking exclusively with Bloomberg's Avril Hong as we continue to watch U.S. futures gaining ground. Of course, we have more positive sentiment on that trade deal between South Korea and the U.S., not to mention mega tech earnings. And take a look at China futures closing to the downside of 0.2%. Of course, we have the U.S.-China negotiations in Stockholm also wrapping up. We'll get more details of that. In the meantime, we have heard that the China Communist Party will hold its fourth plenum in October. That's it from the Asia Trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen.